Distribution provided by Cloud Sigma, the cloud that adapts to you. Visit cloudsigma.com/thisweekin for a free $200 credit. Today's episode of This Week in Venture Capital is brought to you by Walker Corporate Law, a boutique corporate law firm specializing in the representation of entrepreneurs, and by Detroit Venture Partners, an early-stage fund with an all-digital strategy. DVP is run by entrepreneurs for entrepreneurs.
My guest this week on This Week in Venture Capital is Andrew Siegel. He is head of corporate development and strategy for Advance Publications, Inc. You probably know it better as Conde Nast, owner of Wired and owner of The New Yorker, Vanity Fair, and many other titles. Tune in.
One still envying. They hate me with a passion even though they never met me. Family members so.
Welcome to This Week in Venture Capital. I'm super excited to have out from New York today Andrew Siegel, who is head of corp dev and strategy for Advanced Publications. Welcome.
I'm so happy to be here.
And you are in Malibu. Do you come here? Is this like a regular thing for you?
This is a regular thing. We try and do this every year. And I like to do it every time I'm in LA, but we only get to do it every summer. I'm in LA a lot more frequently than that.
Well, that's good to hear. And I guess you probably spent a lot of your time bi-coastal California because you, why don't you tell us first about Advanced Publications and tell us a little bit about your role, and then you can talk about why you spend time in Silicon Valley, LA, and New York.
So Advanced Publications is a company that's been around for about 100 years, since the original member of the Newhouse family bought a newspaper in Staten Island. And the company grew for a few tens of years buying newspapers around the country. And then in the 50s got into the magazine business with the purchase of Conde Nast, and over time bought other things like the Golf Digest companies, as you said, the New Yorker and Wired magazine. Then got into broadcasting and had to get rid of its TV stations after a while because they were in the same cities as the newspapers, but got into cable very profitably as an owner of a multiple system operation called Bright House Networks, and also as an early investor in Discovery. And then with the rise of the internet, began to develop its own internet properties, and then made some acquisitions in the internet. And they brought me on about 2 years ago as the company began to think about what was next in media. So it's a very exciting time for Advance and Conde Nast and the other companies. And
Advance Publications is, not disclosed because it's privately held, but one of the larger media companies in the world, is it not?
It is, and it's got global reach. We own magazines. We're not a licensor of our brands. We operate Vogue, for instance, in Russia. We operate Vogue in China and GQ in China and Architectural Digest and Wired in India. So we're everywhere in the world that we can, under local regulation, own publications.
And interestingly, it's privately held. It's not public.
It's one of the amazing things that over time the family's been able to finance the growth of this company. They're wonderful selectors of media assets and great managers. There are professional managers in each of the businesses, but the family runs the overall enterprise.
And the family always has, or did the family?
Always has.
Always has. It's a tremendous story. Now, you arrived 2 years ago. When we first met, you were running corp dev for Yahoo.
I was.
And so I guess that you brought...
It was a pretty bad sign, Mark, that I left Yahoo to go to a newspaper company. I said, wait a minute.
Aren't you moving backwards? Pretty soon you'll go work at Encyclopedia Britannica.
Is there still an Encyclopedia Britannica?
I really don't know. And we're going to talk about why traditional media, if I could use that word. In a way, traditional media is used in a pejorative way, but you're here to tell me that it's actually quite big and profitable.
First of all, it is big and profitable still, although I think that what people in LA are doing, what people in the Valley are doing, traditional media better figure out a way to work with and adapt to, or I think some of these claims about the death of traditional media will sooner or later come true, and we can talk about some of the ways that we work with startups and we want to work with startups. But look, to me, traditional media is all about the business model of either you pay me for content or some marketer pays me for the introduction to you. Guess what? That's got to be Twitter's business model. That's got to be Facebook's business model. That's got to be Pinterest's business model. So you can call it new media or old media. The business model hasn't changed.
Right. Now, I want to come in a moment to media and talk about the changes in the media industry. But in giving some value to our community, I would love to start with startups. And startups are something you know well, I guess, in your corp dev roles. Part of what you do is acquire companies. Part of what you do is invest in companies and work with young entrepreneurs. How do young first-time or second-time entrepreneurs, how do they begin to work with a company like you that, I mean, do they come to each individual property and try to find biz dev relationships? How does it work?
It happens that way, although it's really inefficient for big companies to be reactive to inbounds.
Right.
Because typically there isn't a function that allows an editor or a publisher or P&L leader to know everything that's going on.
Right.
And so those are really unproductive conversations, and it's not great for the traditional media company. It's not great for the entrepreneur. What is really interesting about the role that I have is what you alluded to, which is I've got the flexibility that as we set strategy, I can make acquisitions, I can make investments in companies. We've done everything from seed stage converts all the way to Series Z investments in the 2 years I've been there. But I can also make investments in VC funds.
Right.
And I tend to focus those investments in early stage funds, people who are playing in the seed or the A round, because that gives me the opportunity to look at a lot of different companies together with partners and get to know them. I spend probably 50% of my time originating. And so the best way to get into a company like mine is either to meet somebody like me who runs the corporate development function or operates the VC function, or through a fund that we've invested in. I'm going to do more and more of this fund investment because there just aren't enough hours in the day.
And that, in a way, becomes a pipeline for you. It's sort of a quality filter for what are the interesting innovations coming.
That's right.
And do you disclose like which funds you've invested in, or should I not probe on that?
We typically don't, but my goal is to invest in as many well-regarded, high-performing funds as possible without getting an overlap. What I don't want to get into is an echo chamber.
Right.
I actually want to hear as many different ideas about what's new and interesting as possible from as many high-quality early-stage investors.
But all great ideas come from Silicon Valley, don't they?
No, they all come from GRP.
Yeah. And that was our first paid sponsorship. But speaking of sponsorship, if anyone would understand it, it would be someone at a media company. I'd like to thank Walker Corporate Law. Scott Ed Walker is the Twitter handle, at Scott Ed Walker. I recommend following him. I actually follow him on Twitter. He writes about a legal perspective on entrepreneurial issues. And in a world that hasn't been that demystified, which is the legal process of fundraising, of how you deal with M&A, of how you deal with employment contracts, he writes in a very human way. So I certainly would recommend that you add him to your follow list. And obviously, if you have early stage legal needs, consider Walker Corporate Law. So let's go to media. And if you read the press, you certainly haven't informed your journalists that your industry is doing great, because the journalists seem to like to write the death knell of media companies. And the script goes something like, ad revenues are going off a cliff, and everything is moving online. And, people like Mark Andreessen would say, burn your boats. It's all digital, all ahead. Software's eating the world. Is that how it feels on the inside, or do you feel pretty well protected in your subscription base, your ad base, your media products?
Look, I think there are very few industries today that you should sit back and feel protected for a very long period of time. But look, candidly, media, and part of what interests me about media is that this industry is undergoing rapid, wrenching change. Yeah. And so the reason I spend as much time in the Valley and in LA as I do is because the new ideas that are coming from people with blank sheets of paper are likely to lead to some of these results that I think the journalists are a little ahead of the curve on. But are they wrong? No, they can't be wrong. I mean, you must respond to consumers and marketers in the way that they want to reach each other. And I think about the New York Times, which is a phenomenal company, and I think about the masthead on the New York Times, and there's a little box that's been there in the masthead for 150 years, and it says, all the news that's fit to print. And while it sort of says to you in one quick blurb what the New York Times is all about, that isn't how people want to get their news anymore. individuals want to follow their own social graph or their own interest graph and not have a group of editors in New York City tell them what's news.
Right.
Or certainly not update their news only once a day.
Yeah.
So traditional media, whether it's newspapers or magazines or any other form of media, better get with the way that marketers and consumers want to be talking to each other and informing each other, or these reporters might be right someday.
I guess some of the way I might put it is distribution is changing.
Mm-hmm.
In the past, it was I had to package it all up in physical format and sell it either via the door or via a newsstand. I guess in some ways news is being disaggregated because I can just consume what I'm interested in. I can just consume the op-ed, for example.
Oh, look, it's being disaggregated from a place and time. It's being disaggregated from a newspaper that hits your doorstep in the morning. It's being disaggregated from a newscast that goes off at 6 p.m. But the underlying value of the content, the information, is only getting more important in our lives.
Yeah.
And that, to me, raises all sorts of interesting questions about this disintermediation of the ultimate consumer from the person who's actually reporting this content or telling this story. There are lots of people who've put themselves in that value chain, whether it's Apple with the iPhone or Flipboard with the app, that may, at a moment in time, seem to suggest that the underlying teller of that story isn't important, but that story is more important than it's ever been.
Right. So your belief then would be that content creation, in a world where we're overwhelmed with content, high-quality content really matters?
I believe that high quality. I'll give you an example. In fact, just today, Kevin Riley from Fox made the news because he was elevated to chairman. I was in his office probably 2 years ago waiting to go to lunch, and on his wall was a poster of the cast from MASH. Now, half your viewers won't even know what that was. It was a TV show that went off the air 30 years ago.
And it was filmed right here. Did you know that?
That's
it was
right.
filmed in the mountains right behind her.
And a good Malibu as Korea.
Yeah.
But, it was a show that at the time, I think the finale was the highest rated program in TV history. And I looked at that poster, and 30 years later, I could tell you who every single cast member was. That's the power of great storytelling. Now, we happen to be at a time where a company like Bleacher Report, which is a phenomenally well-run company, Brian and his team did a remarkable job both operating and growing the company and then executing its sale to Turner. That's a company that doesn't generate what you would consider professional quality, meaning it doesn't have paid sports writers the way that our Sporting News does, which we own, or the way that Sports Illustrated does or ESPN does. And the rumored purchase price was a phenomenal return for the investors and a great multiple of revenue. So we're at a time where the underlying content is sort of less important than is the audience you've aggregated and the way you deliver that information to them. I don't know whether that's sustainable. That to me feels like a market where a buyer like a Turner finds a specific property it needs rather than Bleacher Report has found a new way of, a new business model, or a new way of reaching consumers or marketers.
So fundamentally, though, you've got to produce compelling content and you've got to be able to build an audience that resonates with your brand and therefore your content, because increasingly you have channels that want to be able to control you. And, well, they want to maximize the profit of the channel it takes. And in order for you to get the valuation you describe, you've got to have an audience that wants to seek out the Bleacher Report rather than be served whatever Flipboard tells you.
But this is not earth-shattering, right? This is not 1920 where there's one telephone company and 3 car companies. This is 2012, and consumers are in charge. If you want to, you can change cable companies 3 times in a night. So when the consumer is dictating the terms at which you as a content provider can engage with them, well, you better deliver not only great content, but content in the form they want when they want it.
But I would argue, I don't dispute that, but I would argue that there are new channels of distribution that are powerful and that people need to understand, which is if you want to distribute video, you need to understand YouTube as a distribution platform and partner and figure out how to influence them so you can appear more highly in their rankings. If you want to distribute socially, you have to figure out how to best work with Facebook, because if you get integrated in Open Graph, that's going to drive how many people adopt you through Facebook. And I think the examples go on. If you want to have a mobile app that's well received, you've got to figure out how to build a relationship with Apple and get promoted in the App Store.
Yeah, but those are all algorithms. Those are formulas. I'll tell you a story. I was walking out of my office one evening. I sit in the Conde Nast building in Times Square, and it's a fairly well-known business. It's got a famous cafeteria in it that Frank Gehry designed. And there's a sign on the building at street level that says the Conde Nast building. I'm walking out of the building one night, and there's a German tourist with her parents, and she stops and she looks at the building and she points, and she says, Conde Nast building, Conde Nast. We don't publish a magazine called the Conde Nast magazine.
Right.
But we build brands.
Yeah.
Okay. So distribution is powerful, and working with YouTube is powerful, and getting the algorithms right with Twitter and Facebook is really important. But you have brands that didn't exist 5 years ago claiming world domination. Let's hold on before we declare victory. Vogue is celebrating something like its 120th or 125th anniversary. That's a lot of brand building, and that doesn't go away. Look, I don't have my head in the sand, Mark. I know what we need to do to reach consumers in a way that's refreshing and exciting for them. But I wouldn't bet against these brands that have been invested in for tens or, in Vogue's case, 100 years.
But do you believe that over time, I mean, I guess it's stating the obvious, it's just a question of how long a time. How do you visualize the transition to iPad, Kindle, Nook-like apps for your magazine?
I love those things because after the initial bout of terror that Silicon Valley struck into the hearts of the executives both in LA and New York, saner heads prevailed. And I was, well, wait a minute. This is amazing. This gives us all new ways to tell our stories to our audience. So while Wired is a phenomenal magazine, it is, because of the paper format, a two-dimensional experience until you put it on the iPad. And all of a sudden, a story that we told in text and pictures becomes one we tell in video, which is why not long after I got there, Conde Nast put in place a new head of entertainment who comes from Hollywood, whose job it is to teach everybody around the organization how to tell the stories that we tell in video format.
And so do you think that video will start to enhance or change the traditional magazine and newspaper business?
I do. I think that looking backwards, we'll say, for a while, the traditional media companies defined themselves by the mode of distribution. And after a while, when they understood what mobile could do for them in terms of instantaneousness of information and the kind of information that people wanted to be delivered to them instantaneously, and what the tablets did, that we use those as tools to expand our distribution in a consumer-friendly and a marketer-friendly way.
Who do you think gets it the most? I mean, let's exclude advanced publications for a moment. Who else gets it? I mean, for example, is the New York Times, you get a little bit, your first, couple of hits for free, and then you have to pay and hit a paywall. Is that the right model? Is the Financial Times model that gives you 15% of every story, but you can't read the whole? Is it Wall Street Journal? Is it Washington Post, which is still totally free? Like, who gets it in either newspaper or magazine the most, do you think?
I don't think there's anybody who's cracked the code. What you have just cited is a list of very strategic leading companies who are doing their best to figure it out in real time.
Yeah.
Listen, if you have a storm warning that a storm is coming, 3 months from now, you can prepare. But you take the newspaper industry, the reduction in revenues from $60 billion to $30 billion in annual revenue for the industry happened upon them instantaneously. They had no time to prepare.
Right.
Luckily, and by the way, that's similar to what happened to the record companies with Napster.
Yeah.
But now if anybody isn't preparing for the digital storm, then shame on them.
Yeah.
So I think the newspaper companies are trying to figure it out. The magazine companies or the magazine divisions of those same companies have had a little longer time to figure it out. The broadcast networks have even more time to figure it out because right now the marketers want the frequency and reach that broadcast television gets them. Yep. So we're all getting ready to see that tsunami, stick with the storm metaphor, see that tsunami of ad dollars, that $90 billion that we all expect is going to move from TV to follow the eyeballs that are now looking at the kind of content that's being generated over the top for YouTube and other networks. It's not quite happening yet. So I think the longer that we have an experience with the kind of change that's being driven by Silicon Valley with new devices, new platforms, new operating systems, the more we'll experiment with different forms. Nobody has it figured out yet. So while they're all great companies, and they're all companies that I think will survive, nobody's cracked the code yet, Mark. It's still work in process.
Yeah. But you don't have one favorite, or two favorites that you think really get it, or
no? Because I think everybody is experimenting in real time. Everybody gets that they're in a moment of change and they can't hesitate.
Do you think that there's a narrative that says young people don't want to pay for content? They've grown up in the era of the internet where content is free. Do you think that was just a brief moment in time? Do you think that's an age and demo thing? Do you think it's I like to say some people have more time than money and some people have more money than time. Is it just a segmentation issue? Or
no, that's an age issue.
Okay.
That was one of the things that worried me about Yahoo.
Okay.
And maybe it's different now because Marissa is a younger CEO. See, to me, the Marissa hire was less about a female CEO, because Yahoo had a female CEO and Carol, and had a female president in Susan Decker.
That's true.
But she's young.
Yeah.
And I think if you want to appeal to a younger demographic, you need to present content in a way that young people care about. And young people have more time than money.
Right.
Somewhere in our life it changes, and we're all about the time and the sands passing through the hourglass.
I would pay unlimited amount of money to get the New Yorker because of the quality of what they produce. And for me, in a world of increasing crap available on the internet, knowing that I can go somewhere like the New Yorker and get high quality journalism is what drives me. But I cross that threshold.
Right. There's a certain segment of the audience that wants a high signal to noise ratio.
Yeah.
There's another segment of the audience that wants to get lost in content. Look, Reddit is a great place to lose yourself for hours at a time.
You guys own Reddit. Let's talk about that. That's a good segue. You bought Reddit when?
4 or 5 years ago.
And what drove Advanced Publication to buy Reddit?
I wasn't there at the time, so I'll say brilliance. It was an amazing self-awareness that potentially the future of communication was going to be fundamentally different than all the news that's fit to print, top down from New York City 5.
But 4 or 5 years ago, it wasn't quite apparent that Digg was going to go off a cliff, was it?
No. But we don't believe that this had anything to do with Digg's loss was our gain.
Right.
We think the business models were slightly different. The way that the curation from the community happened was slightly different.
What has Reddit done right that Digg didn't necessarily get? Or why has Reddit succeeded?
I think that Reddit's been very open and transparent with the community. We didn't try to drive Reddit from the top down. Reddit's first CEO has just been in place for 3 months.
Right.
And when we went out and found the CEO, his name is Yishan Wong, we wanted somebody who was a Redditor, who was of the community. And he, the first time he stepped in the office, he did an AMA, which is short on Reddit for Ask Me Anything. And he put himself out there, and he's got a sense of humor about it.
And his background is what?
He was the first director of engineering at Facebook. He had come to Facebook from PayPal. So he's of the Valley. Was he in that
group that I saw in the movie that was drinking to try and see if they could win the programming contest?
I think Yishan is coding all the time, but he's a wonderful CEO.
But
he's a first-time CEO.
How do you motivate the first engineering director of Facebook to join a subsidiary of a company like yours?
First of all, you don't treat it like a subsidiary. So you have to break the rules that says, well, if you're a big company, you can't get equity, or all vice presidents have to make salary in this band. If you want high-quality people who are going to start with a blank sheet of paper and press and do things that are innovative, then you need to be innovative in how you treat yourself. And you can't take yourself too seriously. But Yishan is managing this in a way that's very responsive to the community. We saw something happen this year and in just the last couple of months, which is even different from what we thought Reddit was going to be.
Right.
And we're going with it. There were, unfortunately, 2 tragic shootings, one in Toronto and then the one, of course, in Aurora. And what happened after almost just as the instant aftermath of the shootings was that people started going on Reddit and reporting what was happening. Now, this isn't the same kind of reporting you're seeing on CNN that's carefully edited. This is real-time stream of consciousness. But this is a different kind of news flow, and the community really welcomed it. And we saw a lot of traffic happening in the aftermath of both of those things that suggested there's an appetite for this new crowdsourced
Is there
news gathering.
some analogy of Reddit and Twitter? Or totally
No, I think
orthogonal?
I think that there probably is some overlap, but I also think there are elements of both that are orthogonal. Twitter's very well organized. You go and it's very well curated in terms of the onboarding experience for the new user.
Yeah.
Reddit, it's like you learning to swim, your dad throwing you off the dock and saying, I hope you get to shore.
Right.
That's a little like the Reddit experience right now.
Yep.
And that works for the Reddit community.
Okay.
And part of Yashan's opportunity and challenge is to figure out whether, Reddit needs to have more of a new user experience or whether the way it works today is attractive.
How should entrepreneurs know if they should approach you for funding? Is it a case that they have to first be funded by one of the VCs you funded, or can they approach you directly? What kind of company should approach you at what stage?
We think about two big questions. So if I'm an entrepreneur that's looking to work with a big media company, and we love entrepreneurs who show up at our doorstep and say you're doing it wrong, we can help.
Okay.
Those are conversations I want to have. And there are two ways that they can do that are very interesting to us. First of all, do they have some sort of technology that allows us to better reach consumers in the way that consumers want their information? And the second is there some opportunity for this technology to create new packages or new platforms for marketers? Look, at the end of the day, media companies sit with an audience, and in the case of Conde Nast, it's a large audience. In the case of Bright House, it's a large audience. But you fund your business not only through subscriptions, but through the sale of advertising programs. Yep. And so marketers are very important to us, but marketers are reaching consumers in new ways. Technology allows marketers to go directly to consumers. And we need to understand what those channels are and how we can add value in those conversations. So if an entrepreneur has a business model that is somehow cutting the number of steps in that funnel to get to a consumer, we want to know about it because we can turn that technology loose on our audience and on our marketing partners. So the best way to reach us if you're an entrepreneur is, of course, a warm introduction through a VC we work
Yep.
with, or through...
Do you lead rounds? Do you tend to...
We can lead rounds. We can follow rounds. We'll do off rounds. We will not only put our own money to work, but we will take performance warrants sometimes.
Okay.
If we're willing to put our money where our mouth is. The most important point for me is that the new ideas can't come from inside big organizations. The only company I've seen do that particularly well is Google with their 20% rule.
Right.
The fact that an amazing product like Gmail can come out of a 20% time freedom that somebody like a Paul Graham has or Paul Buchheit has is something that big companies need to mimic. But for me, new ideas will mostly come from entrepreneurs who come knocking on our door.
And I want to come to a moment. You talked about marketers reaching an audience, and I want to come to that in a moment. But what I want to do is find an authentic way for us to make money. We support this show through sponsors. One of those is Detroit Venture Partners. And one of the interesting things about Detroit Venture Partners is they have a remit of helping to fund and grow companies in the Detroit area. They do fund people outside of Detroit, but they have a special mission to try and build a community in Detroit, and I think that's something that ought to be commended and our country needs. Their Twitter handle is @DVPtweets, and Josh Linkner is a managing director there. He's a 4-time entrepreneur himself. I've spent a bunch of time with Josh, and I would suggest that you consider them on your list of people you talk to. Let's talk about social media. Social media is both an opportunity for you to grow audience, to build a direct audience so that you can distribute your content. It's potentially a threat. I guess one could see it that way. How do you think about social media? Which bits excite you? Let's talk Facebook first. How do you view Facebook?
We are very interested in what's happened to Facebook stock.
Yeah.
It's almost like the public investors are scared that Facebook isn't what it was promoted to be. to me, every new internet user is also a new Facebook user. You can just tell that by the sheer
One-to-one mapping.
One-to-one mapping. And until somebody else comes along who has that one-to-one mapping, Facebook is the future of the internet. Does Facebook have to figure out mobile? Yes. Does it have to figure out an advertising product that is something that's acceptable to its users? Yes. Will it do so? We have full confidence in it. Again, to me, whether it's a Google search engine or YouTube as an audience aggregator in video or Facebook or Twitter, these are all different tools that help consumers organize their busy lives or get the information they need in front of them at the right time when they need it. For a content provider, you can't be too wedded to your distribution because this is a world in which distribution costs are trending towards zero.
Yep.
You don't have an advantage in distribution that's historic because somebody can come along and dislocate you from that distribution. So we look at all of these intermediaries to the consumers as platforms for us to be present on. Do we have it figured out? No. I would argue to you that no media company does yet.
Are you investing in email? Because when I think about it, so people have talked publicly about the death of email, and that's something I just don't believe in. I look at email as this great asset that one can march from as new distribution platforms open, as Facebook becomes prevalent, and then Twitter, and then Pinterest, and the next 5 that come. Email is this great asset that if I own a relationship with a consumer through their email address, I can migrate to new distribution platforms. And for me, even more valuable than an email address is a mobile phone number because it creates more immediacy, more intimacy with how I can communicate as long as I authentically use that relationship to communicate. Anyway, I'm interested to know if you guys think about that as an asset you invest in.
We are thinking about it now in fresher ways than we've historically thought about it. We have subscribers' email addresses, but we never really used that email as a way to communicate with our subscribers except for things like it's time to renew your subscription. We invest in something called Trigger Media, which is an email push publishing firm. And Trigger's mandate is to launch 4 or 5 new email products. Along with that investment comes access to the kind of thinking that will allow us to use our email addresses in new ways of reaching consumers. If you want information from Self Magazine or Allure Magazine, I'm using here 2 Conde Nast brands, more often than every month, well, email's the way to get it to you. And if it's urgent and you've asked for it, then maybe text is the way to get it to you. Again, I think content has to be disaggregated from the form it's historically been delivered in.
And I almost am thinking about media as a funnel, which is, let's take the New Yorker. So I subscribe to the New Yorker, and I read as many of the editions as I can. All the articles are so damn long.
They're long.
Hard for me. I need
the writers get paid by the words, you see.
Okay, I need more flights to do that. And then you will have people who probably occasionally like to read a New Yorker article. And, of course, I'm just using New Yorker as an example. And then you have the people who know of New Yorker, maybe came to the website, but don't consider themselves New Yorker readers. And for me, that top end of the funnel is the reason you want the email address, because you want to constantly stay on their radar screen and awareness. Almost like musicians, okay? So Topspin Media, I don't know if you've come across them.
I don't know.
It's run by Ian Rogers, phenomenal entrepreneur, and he helps bands to build audiences directly with consumers. So he's built a software platform to do that, backed by Foundry Group. And one of the things he's been talking to bands about is, okay, if you're U2, you've got ready-made audience. But if you're an emerging band, you may want to give away free samples of your songs in exchange for an email address, because once you have that email address, it's an asset that's going to pay you for your next 5 albums. So he's encouraging people to give, to get, and then sweat that asset over multiple
But it's got to be a fair exchange of value.
Yep.
You know, people who give you their email address too freely are probably giving you an email address that all their spam goes into.
Sure.
If you're going to use somebody's email address, you better make sure that what you're providing to them is of quality, and and we
That's a
measure
great
these
point.
open rates, right?
Yeah.
So it's all in the open rate.
Yep.
And that's what Trigger, for instance, is really good at. That's what Andy Russell, who runs Trigger, made a career on at the Pilot Group. How do you get that open rate up high? Well, it's not by tricking people. It's
By having authentic people who subscribe to you in the first place.
authentic people who want to have. See, this is the great thing about advertising. It's not like people don't want advertising. If I'm in the market for a new car, I actually want to hear about what's happening in the auto marketplace. I want to know who's got new models coming out. I want to know who's got incentives. I want to know what the features are. I want the comparisons. It's only when advertising interrupts something
Yeah.
that it's not
I
interesting.
mean, Vogue is a great metaphor for that because it seems to me that 50% of Vogue or more is an ad, and yet when I watch my wife read magazines like this, she's consuming the ads almost like content because they're beautiful images.
Vogue was the reason I left Yahoo to go to Advanced Publications.
Right.
Because I stumbled across the September issue of Vogue magazine a couple of years ago. And on the cover of the September issue, which is always the biggest issue of the year, it said in big bold letters, 104 pages of content. I counted. Of those 800 pages of content, 700 were ads.
Yeah.
Far higher than the 50%, which is why traditional media isn't dying anytime soon.
Yeah.
But the point is that 10% of the women in America read that September issue of Vogue because the ads are content.
Yeah.
And that's the world that we are going to. You see that in companies in LA who are breaking the mold between the 22 minutes of programming that's not advertising and the 8 that is.
Mm-hmm.
You're going to start to see this happen because consumers are saying, it's okay, I got it. I can figure out when it's authentic, and I'm okay if it's commercial backed.
So just so people understand that, because of course you and I do, but just anyone who doesn't know, in television, the standard 30-minute format is 22 minutes of content, 8 minutes of ads.
And we invested, and that, of course, is a TV example. But listen, display has a real problem.
Yeah.
My view of display on the internet is that the IAB, to a degree, hurt itself by standardizing ad units. Now, it had to, so everybody could sell the same thing. But by standardizing ad units, you sort of said to the consumer, if you ignore the outside of the
It's called
bottom,
banner blindness.
It's called banner blindness. That's exactly right. And so you've got to do something to get that click-through rate, that engagement rate up higher. We invested in a company called Flight. Conde just announced it today, in fact.
Yeah.
And Flight's got technology to make display ads more engaging. I believe that people won't ignore banners if you can actually fill those ads with something that's interesting. And so when I was at Yahoo, for me, it was all about buying companies that were about dynamic creative optimization so that you could actually put content in ads in real time. I was seeing ads on the front page of Yahoo that were trying to sell me Dove soap. Well, I use soap, but I'm not the soap buyer in the household, so that was a bad experience for both me and Dove. I think if I'm seeing an ad that doesn't pertain to what I'm interested in, then somebody's not using the technology that exists today.
Now, speaking of ads, what do you think of product placements? Product placements are acceptable. I mean, I should say we almost look like we could be a product placement for Panerai, but we didn't really plan that out.
We did not.
Product placements, are they increasingly it's called brand integration. Legitimate ad?
Look, one of the themes that we invest around is what I call brand to consumer disintermediation. The technology exists today to let brands speak directly to consumers. And I don't have a problem with that as a consumer, as I say, as long as that's part of the narrative arc, or as long as they've done enough of the homework. And look, we leave our signals all over the web, and sometimes it's intrusive and sometimes it's welcome. So I don't have a problem with that because I think consumers have evolved to the point where they don't need a watchdog saying, well, wait a minute, that's a commercial message. You need to be told that that's a special promotional section, or you need to be told now it's a word from our sponsor.
Mm-hmm. So you think ultimately communities figure out what is an authentic ad and what's not?
That's right. And I think brands are beginning to figure out that they can't manage their budgets with some agency doing their TV and some agency doing their social and some agency doing their content marketing or their custom publishing. Brands are realizing, at least today, and this may change as the technologies and consumer use of digital technology changes, but brands are realizing that the more authentically they can speak to consumers, the better that consumer relationship is.
And have you been following the Dalton Caldwell app.net Twitter debate at all?
I haven't.
So Dalton Caldwell, who created iMeme and was a founder of the holding company that became, is it Pixel Please, or I can never even say the name of that damn company that was supposed to be Instagram and wasn't.
Right, Pick Please, yeah.
Pick Please, thank you. A terrible name. I have this mental block that I just can't say it. It's so lame. But he has now raised $500,000 for a company called app.net, and he raised it all through individual users in a Kickstarter way. And what he's publicly said is that he thinks Twitter has greatly diminished the value it can ultimately provide by targeting itself too much to advertisers, and that what you really ought to have is a network like Twitter that is advertisement free and that consumers pay to use that application. What would you say to Dalton?
Look, you mentioned a moment ago this idea that younger consumers have been trained that content is free. Look, I don't think anybody is that silly to think that alchemy exists today and it didn't exist thousands of years ago. If you want VCs to invest in companies, if you want buyers to buy companies that the VCs have invested in, these companies have to have business models. And they either have to get paid by marketers to reach consumers, or they have to get paid by the consumers themselves. So I'm a big believer in the fact that today's young people will pay for content. I think Apple started teaching them to do that with iTunes. My credit card bill shows up every month with lots of apps that I didn't buy. Right. I'm not buying Doodle Jump.
You gotta change your password.
Right. My 7 and 9-year-old daughters are buying content. Now, for the time being, they're living in my house and they're charging it to me, but at some point they'll have their own credit cards, but they will have been trained that content is to be bought because somewhere there's a software developer who's putting her time into developing that app.
To make it more human, I like to say it's not really just about VCs. It's not just about corporate buyers. But when you think about it, content creators who might just be someone creating that article for Wired Magazine, it might be a news correspondent for CNN, it's their livelihood, if people are, either if advertisers are willing to sponsor content or end consumers are willing to pay for content. The less that people are willing to pay or that advertisers are willing to fund or sponsor content, it's content creators that lose.
And we believe, obviously, Conde Nast and the newspapers have been built on best-in-class content creators. You have to be able to afford those people. Now, what the internet is great at is along with the cost of distribution trending to zero, the cost of production is also trending towards zero.
Right.
You are getting content creators now who didn't have access to these centralized media companies before.
Yep.
My daughter, who's 9, will go make we'll call it a movie for purposes of this conversation. She'll take a flip camera, which is 2 buttons. She'll make a movie. She'll attach it to the app. To the Mac, iMovie will come up, and she'll be able to sort of figure out how to move those stills around to make a movie out of it. Now, it's not a Spielberg movie today at 9, but imagine she does that every weekend for the next 10 years with technology that gets better and better every year. What kind of storytellers are we going to be turning out 10 years from now? So this is a great opportunity. Someone's going to have to figure out a business model to pay those people for their time. It may not have to be as much as we pay the Malcolm Gladwells or the Kendall Letters of the world today, because more and more there will be a different supply-demand equation. More people will have found the joy of creating content. But whether it's a Kickstarter model or an equity model or purchasing content model, somebody's going to have to pay these content creators.
But do you believe that advertising has sullied Twitter as a company or as a product?
No, I don't think that the product is any worse for the advertising. Again, it depends how authentic you are with it. I followed for a year after the oil spill in the Gulf, BP's use of Twitter. That was one of the poor uses of Twitter I saw, because they were constantly pointing to the good news. We're having a concert here, or tourism is up here. They really could have used Twitter as a way to authentically engage with the community. I think they missed the opportunity, but other brands do get that. But look, this is different than the historical marketing where you're trying to shape the customer perception. Consumers, especially young consumers with the money to put to work now, want to have an authentic dialogue with a brand. That's a little different than the historic.
Well, it does allow them to create certain access to people and to brands that they maybe didn't have in the past, which I think is interesting.
I think it creates new opportunities for the brands, but you got to get comfortable with that. It's a little risky because when you open up your brand to that kind of public dialogue, people are going to say what they believe, whether that's pro or con.
Now, last major topic area that I'd love to cover, actually I have two, but one major, which is M&A. One of your roles is to buy companies. Independent of advanced publications, how should startups think about that process? How does one, in more generalized terms, approach bigger companies? Should you go through the corp dev department like yours? Should you go to a business unit and create demand? Do you have to go via a banker? Talk about how that works.
We'll participate in processes. It's the worst possible experience because it's an auction.
Yep.
And most of the time, people who win auctions also win a case of buyer's regret.
Yep.
And people who lose auctions always say,
"Phew,
what an irrational buyer that was."
Yeah. Okay.
Yeah.
Yeah.
So the origination of investments for us is also part of the same chain of the origination of M&A. We like to get to know people early. We like to talk to them openly about what they're trying to build and what their ambitions are. It's not just about the technology. There are plenty of stories of companies who have bought technology to see the founders leave after their holdback or lockups expired, and then within months the buyer's writing down the technology, because guess what? It didn't mean much without the vision of not only the founder but the team that was loyal to the founder. To me, it's not just about the technology, therefore. It's about the team, and it's about the team's vision. So the team has to buy the buyer as much as the buyer has to be willing to suspend disbelief and write a billion-dollar check for a company that hasn't generated revenue yet, to take one example.
Otherwise known as Instagram, which apparently was only bought for $700 million, if you believe the papers.
And getting better all the time.
Yeah, exactly.
Unfortunately for Facebook shareholders and the Instagram sellers. But the point is that you are buying a group of people who have an ambition, who have a vision of the world that's different than yours to some degree.
Andrew, if someone approaches you and wants to sell their company, is that a signal to you?
It isn't. It isn't a negative signal.
Okay.
Nor is it a positive signal.
Okay.
The positive in it is that they are an anti-big company.
Right.
Look, big companies come with audience. They come with checkbooks. They come with the ability to avoid fundraising every 12 months for the next 3 years. Whatever it happens to be, that's friction for a small company. Sometimes a big company can alleviate that friction and get you into the market and get you to that promised land that your vision or ambition is sooner. There's also a negative. If you're willing to sell, there's always the person in the room who says, I'm just playing devil's advocate, but why are they interested in selling?
Right.
You've got to get past that, which is why it helps to get to know the entrepreneur before you have that acquisition discussion. But even if someone says to you, or a VC calls you, or a banker calls and says, listen, we were out fundraising, but we got some inbounds, and so we're just beating the bushes a little bit, that's okay too. The only issue is you can't make strategy by M&A. So if you're an entrepreneur, you shouldn't necessarily think that because a big company is a little slow to engage with you on that kind of message, we're out beating the bushes, that's because they're a big old dumb company. It's because strategy isn't made by M&A. You set your strategy, and then you find companies that help you achieve that strategy.
Is it fair to say that every company is different? I've seen some buyers where, well, like Microsoft famously, I've heard if you want to get bought by Microsoft, you really need a product champion who believes that you have a hole in their product roadmap. They have to champion you, and then Corp Dev runs a process to figure out the right price to pay and so and how to structure the deal. And there are some companies that have a stronger Corp Dev group that sets a strategy for a company and then goes out to buy companies that fit.
You know, I'm not one of these guys who believes that all the great ideas come from Corp Dev.
Right.
You can't. You're too far from the business in terms of where the money's getting made. Good ideas for acquisitions should come from everywhere in the organization. The best ideas come from people who are closest to that company's consumers. Who generates the revenue? Who creates the profitability? That's what you need to worry, right? Every company needs to worry about revenue growth and profit margins. So the best ideas for acquisitions will come from those folks. The issue often is that they're busy running their business.
Yeah.
And they're just trying to make their quarterly numbers or the annual numbers, and they're not looking down the road. And some of these technologies are things that are going to be a little helpful today, but are going to be massively more helpful 3 and 4 years from now. Maybe Microsoft has the right setup. For me, it's always about talking to as many of the business people as possible. At the end of the day, you've got to get consensus. And I know that's frustrating too to entrepreneurs because they're used to being decision makers. They're in smaller, more nimble, agile organizations. Bigger companies have different constituencies. It's not a negative. The more people who get this, the more people who are going to throw their weight behind the acquisition. The rubber meets the road not when you stroke the check to buy the thing, but when you actually help the founding team achieve their ambition. If you're a founding team and you think that the finish line is when you've sold your company to somebody, then I probably don't want to be talking to you because I want you to believe that together there's going to be a bit of reverse integration. We're going to pick up some of your DNA, and you're going to leverage what we're terrific at to achieve what you thought you were going to be able to do in a marketplace with your disruptive product or technology.
And so last small question, Pinterest. Is Pinterest real? Are you guys experimenting with it? Are you seeing much conversion from it?
We are experimenting with it. We see conversion in a way that I think the holy grail of Pinterest is to drive consumer transactions. We're not a consumer brand insofar as we want to drive engagement in those days of the month or the days of the week that you're not receiving a publication from us. It's for real. Is it for real with a very broad audience? We don't know. And how sustainable is it until the next thing comes along? There's an argument that says Pinterest is just Zynga's customer base that's moved on from playing social games.
Right.
So what happens?
I haven't heard that. That's clever.
Well, when you look at the demographics of the audience,
I think there's probably some truth to that.
There's some truth. There's some overlap between those audiences. Now, that's a big, important audience because women in that demographic drive 85 or 90% of household spend.
Right.
So we know that whether it's the L'Oreals of the world or the Nestle's or the Procter & Gamble's, they're going to follow these new companies because that's where the eyeballs are. How sustainable Pinterest is an open question.
Great. Well, listen, I don't want to take up more of your time. What people may not know, and I should say a big thank you to Andrew Siegel because you're actually on vacation and you've agreed to take this interview.
We're surfing now.
Yeah, I heard that already. You're on surf lessons, Point Dune, is it?
Right.
And I also, of course, want to thank Walker Corporate Law at Scott Ed Walker and Detroit Venture Partners at DVP Tweets. But thank you again, Andrew Siegel of Advanced Publications.
This was great fun.
Thanks.
Jealous ones still envying. They hate me with a passion even though they never met me. Family members so